Today is the 31st of May, the last day of the month, and it means that if your market is trading all the way till this weekend, then the close of today's candle will mark the end of a monthly candle. This simply means we will now have a bigger, higher time frame context to look out for the next and upcoming sets of months. If the context is in your favor, then it's a stronger sign to start gearing up for that direction in your bias, right? And if it is not, then I think it's time for you to look at the lower time frame and become a little bit more skeptical. But again, it is context based. If you're looking at the monthly, the weekly, well, the monthly is more like the big guy. But if you're looking at the weekly and the daily for your higher context, then you're fine. You're fine. Personally, as a swing trader that I want to become and that I've been becoming over time, I have noticed that the monthly candle is by far the most credible show of directions that you can ever imagine in the market. So without further ado, let's head into seeing what the end of the month looks like, especially for the US dollar index. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So I'm going to start the US dollar index with a super clean chart, right? Let's just take out everything on the chart, hide our indicators. And clearly we can see that the last few months has been very, very bearish. I think let's put it all back on the chart. And the very first thing I can see is that there is this strong channel here, which has been constantly in view recently. And for the first time, price seems to have gone above that channel, but now it returned into that channel. If I should squeeze this channel, I'll say here to here, right? This point to this point, it looks like it's a bit bearish, bullish, well, whatever it is, this was what we were looking at. And then in previous month, as of December, price broke above and everyone had faith for a stronger dollar, and suddenly after the election, Trump came in with tariff wars, quarrels, and issues, and currently the dollar has fallen way below the expectations, like the hope a lot of people had for it. If you even look at a longer time frame, like this was the lowest low for the past 1 year. This was back as of June 2023, and for the past 2 years actually, we can see the dollar has really sank below, and closing below yesterday being Friday, closing below that low well for a good move. Now, as a trader that I am, based on the strategy I personally use, I like to do fair value gap, though I look at the market in terms of things like supports and resistance, trend lines, and also the Choch approach, which is the Quasimodo approach. In other words, you can call it the QM arrow and QMC method. But whenever I see any of all these, I kind of like it. So, but like I recently said, I found a strategy for myself, which is no strategy is fail proof. That's the truth. So I found a strategy for myself where I can easily spot that things are happening based on the fair value gap strategy. I'm going to be explaining that in a separate video probably tomorrow, but for this particular video, the entire focus remains on trying to use the MMC to get a bias on markets and expectations of the view. So looking at the monthly candle right here, what we have on the DAX is we have two very strong bearish fair value gap, like two clearly showing off bearish fair value gap. Now, in the words of the MMC teacher Ayo Johnson, this is one of the most credible fair value gap move you can have, having a consolidation third candle. But again, there's always a but. The other problem is the fact that this high doesn't have a fair value gap overlapping. This is our high, our swing high, or rather swing low in this case. Our swing low is actually the first line of defense, while our fair value gap is the second line of defense. This is about a 75 to 50% chance of falling through, which if you notice, the first time it happened right here, it didn't fall through. The other time it happened right here again, it didn't follow through. And what he says is, whenever you start to see fair value gap disrespected in this manner, you are in a consolidation. So in other words, what we're saying right now is that this market right now, like this, is literally a consolidation ongoing, like this. That is what is really ongoing in this entire market right now. So until market breaks out of either of this range, we are likely going to stick in a consolidation, unless the fair value gap starts to get respected. So looking at all of this, putting that into context, with this being destroyed, this being destroyed, it simply means one thing, right? It simply means one thing. Looking at the current situation is what matters in trading. What is happening currently? We saw this is possibly a rise up, a fall, and a pushback, a slight pushback that wasn't strong enough, most likely, right? So let's see. You can see exactly what I felt. A rise up, a pushback, but another rise up that wasn't so strong enough to cover up all the fall down, all the falls we've seen. So in the coming days, what do we expect from the dollar? Well, you can see that the US dollar was gaining strength recently in the last 3 days. It gained in the last 4 days, lost on the 3rd day, came back up again on day 4. So that's 1 day, 2 days, 3 days on the drop, 4th day on the uprise. And we need to really look into this and see if we're moving any better, right? This is the angle we need to look into to see if we're having any better view. So on the 1 hour, we expect to see the usual, right? The sharp turn, fair value gap in and the fair value gap out. So what I see here is a strong fair value gap in, which was not even mitigated. It was not properly mitigated, just very tiny mitigation. And now you see a fair value gap out right here, which seems to have gotten respected at first, but at this point it seems like it's no longer getting so much respect. So what are we saying in other words right now? What are we saying in other words? We're saying that there is a high tendency, right? There's a high tendency, whatever is happening right here, price is going to start finding its way. It's going to go low a little bit, probably start finding its way back up till it comes back for this fair value gap. And that is what we are always hoping and waiting for, basically, as a trader of the MMC concept. You're just hoping that the price finds its way back to the fair value gap, which is this monthly fair value gap in this case, and starts to react properly, which is it starts to allow me bring this up. Sorry, I didn't turn this out. Okay, so the expectation is for price to find its way back in here and then find its way out of here. That is the expectation people are having for all of this. Your expectation doesn't mean the market is going to do it. Don't forget, your expectation is just your expectation, and if price works in your direction of your expectation, then you're fine, you're good. If it doesn't, then you chill and wait for something else to happen in your favor. For those following the weekly context, well, they had a good 2 weeks run, in my opinion. It's a 2 weeks run, right? So there was this right here, which ended up producing this long run, as you can see right here. So with that in mind, if you put that on the 4 hours, you see, where is it? This is what I drew. First mitigation was right here. Mitigation was right here. You can see now this is the type of fair value gap I trust when it happens inside. So the first one went in, there was a small fair value gap here, in and out, but like I said, I was editing a new strategy for myself recently where I now use this line called SuperTrend to determine if I should follow a sharp turn. You can see right here we had the fair value gap in. This was like a very strong one, and immediately followed by a fair value gap, very tiny fair value gap out at that point, and then another follow through fair value gap. Even another one is here, but in my case, I like to wait for this to cross the super trend. I do not edit the super trend. I let it stay at 10.3. So that is 10 periods and factor of 3. As soon as it crosses this line, which is the trend line, this is actually a trend line. If you draw a trend line here, you will notice that this is the candle that actually broke a trend line. So as soon as it breaks, I can then finally agree that okay, this seems like a good enough reason to trade this market. Put my stops here and aim for my usual 2 risk to reward ratio. So at this point, I would have been long out of this trade, matter of fact, because my stop loss, I would have moved my stop loss long ago. Sorry, I would have moved my stop loss, of course. I would have moved this following this line. I would have followed this line, and that will put my stop loss. You can see I would follow this line all the way here, follow it here, follow it here, follow it here, meaning this is where I would have been out of the market already. So in order to make that clear, so right here, this is where I would have been out of the market if I was trading the DAX, the US index for a trader. If I was trading it, this is where I'd have closed out of this trade. That would be about 50% of the risk to reward ratio. You see, that's about roughly almost 50%. I would have been stopped out of this trade already. While some people will still be in a little bit, we would have the drawdown, had a profit again. I won't sit down for that roller coaster. So basically, from the US index, we are expecting some pullbacks, and then possibly a strong fall in price. That is what we are expecting following my strategy. Now, the strategy is a predictive strategy. It tends to predict what it thinks the market will do. With this idea in mind, let's now look into the majors. The majors is where we're going to be looking. Let's start with the Australian dollar against the US dollar. So we know there's now a monthly situation, right? There's now a monthly situation. We're going to look at the monthly situation right here. Let's take out every single thing here. So on the monthly situation, right? The previous month we had this clear rejection. We're hoping for what? We're hoping for a run to the upside, but we didn't have that. Instead, we had what? A consolidation month. You can see the whole of May against the Australian dollar was seriously consolidated, heavily tight. I mean, take a very good look at this very tiny range it did compared to all of this in the previous month, and then all this has been made. We've not seen something like this until January. It was January, and then November. That was when we saw situations as small as this between the Australian dollar and the US dollar. But in this case, we can clearly see there has been some strong consolidation, and there will likely no clear direction. I mean, this is not a candle pattern that you can look at and say, okay, the market is going to do this after it has done whatever it's doing. No, there's no clear candle pattern. It's not a doji, it's not a morning star, it's none of all those pattern stuff, right? But what we're seeing here is there's a possible chance that the Australian dollar and the US dollar have like very close marking recently. Like their price, the rate of growth for both of them have been quite close to each other, or rate of default of both of them, right? Now, since we do not have a monthly contest, let's go down to the weekly. On the weekly, we have this bullish fair value gap, which has been here for like a long time now. I've been watching this fair value gap, and right now, I won't lie to you, this fair value gap is no longer looking credible enough to work with, right? It has had 1, 2, 3, 4, 5 weeks away from itself. So it's no longer, in my opinion, I don't longer see it as like very credible to work with, because I mean, this history is too far back, right? It's too far back. Secondly, it's not even an overlapping situation. You can see we have this as the first line of defense, this high, swing high, as the first line of defense, and it means the fair value gap is the second line of defense. On the weekly, this is not the market I want to even be looking at and trading. Now, with all due respect, you all know I do not really like to look at the daily. Like, I do not like to look at the daily at all, because to me the daily is just deceit. To a good extent, it's just deceit, unless you are actually having fundamental news at your fingertip all the time. You're always chasing fundamental news. Then the daily is like a very good perspective for you to know if you're in a trade, step out. If you're not in a trade, then you should stay away, or you should actually take a trade. But in my opinion, looking at this on the daily, I still see it as a consolidation. Why? Because everything has been happening within this tiny range right here. Everything that has been happening for a long period of time, for the past 4 weeks, has been within this range right here, which to me, that is consolidation, and I do not want to be in a consolidating market. Some people's strategy work well in a consolidating market. This is not a market I would want to put myself into. Moving on to the Euro US dollar. The Euro against the US dollar, let's see. We have a new month to look out for. So on the monthly, right? On the monthly, first and foremost, we have one of the most credible things we will ever see. We have a fair value gap on the monthly, which is a good thing. That's too big. But we have a high, which is the first line of defense. So we're likely going to see some consolidation around here, even if price finds its way down to this fair value gap. We're likely going to see some consolidation in this market, and we just hope to put our fingers crossed and hope it works fine for us. So in that light, what do we hope to see on the weekly? Well, on the weekly, we do not have a fair value gap, and judging from that, like, you know, I like to, if you do not see the first one, you move on to the next one. The next one is fair value areas, and I'm looking at this market from fair value areas perspective, and I'll say it to you in my opinion. This market is trouble, and let me explain why I say it's trouble. So let me just draw the fair value areas out. Right, this is it. So by virtue of fair value areas, right? By virtue of fair value areas, all of this has been covered. So let's call this the fair value area. All of this has been covered. Now, if the market is bullish, then we expect the market to come in, mitigate with this fair value gap, right? Mitigate with this fair value gap, and then push higher to create another fair value area. Meaning, we are expecting the next fair value area to be somewhere around here from price, push above it, and then try to create other fair value areas if it's going to be bullish. In the case where it is not bullish, then we are waiting for price to do what? We're waiting for price to find its way all the way down here, and then we will likely see price do this. It might not do it straightforward. It might, you know, dance around as usual all the way here, and then break through, come back for a retest before it finally starts to shoot downwards. So for fair value area traders, this is what they are looking at, right? This is what they are looking at. Let's look at other means of possibility for this market. I did not want to remove all of that. Yeah, this is all I wanted to remove. Okay, so let's look at other possibilities. Other possibilities is, I'm looking here and I'm seeing a kind of pattern. So let's see if that pattern is credible. This is way back as January. Let's see. So if you all know DAX, right? DAX strategy, we'll see. Let's see, DAX strategy is here. This is a high, this is a low, this is a high, this is a low again, and this is a high. So from DAX strategy, is expecting whatever price is doing whenever price finds its way down here. So I think I should take this up to the daily, if this can be run on the daily. I think this can be seen on the daily. So on the daily, if price can find its way down to this position, right, down towards this position. Is it on the weekly? I think it's not on the weekly. Yes, it is on the weekly. Yep, it is on the weekly. So it's a low, a high, a low, a high higher than the other low, drop higher than the other low again, drop, and keep moving like that. So dark strategy is this. This week is here, right? This is where it's looking at, and it's expecting this low to be protected. And what is he going to be aiming for? He's going to be aiming for price coming here. As it is right now, based on the strategy for DAX, it means he has already set a plan for this, probably this low, and is aiming for his usual 3 risk to reward ratio, which is about this point high. So this is it for 3 different strategies in one go for this market. But take note, this is like the weekly time frame, right? So it's going to take like a long time. It could take a year, it could take a year and a half for price finds its way here. Or if price starts to make these tremendous runs as usual, it could find its way down here. On the daily, on the other hand, on the daily, what I have here is, let me put this back as the first line of defense. So on the daily, what I have here is, I kind of feel, what's going on? I'm not seeing my stuffs come up here, so allow me delete them and bring them back. Zigzag and SuperTrend. Yeah. Okay, so I don't need to draw any of this anymore. Oh, there it is. There it is. You can see right there. There it is. Up, down, up out of the area. On the weekly, you can also still find it when you tone this down a little bit more. So on the daily, that is where it really sits and it shows. This is where it shows. So following ordinary supports and resistance, right? Following ordinary supports and resistance, people see this, right? They see this area as an area of support because price has, broken through it, and they expect price to, guess what, make its way down. And with this, some people are already in a buy position, keeping their hands just below the formal support region, and hoping for price to just keep, just keep going. Some people might be aiming at a 2, 1, 3, whatever it is, but these are all the things going on. So basically, all the strategy is saying Euro USD buy. That's what it's basically saying right now. But for the strategy I personally use a lot more than any other strategy, I don't see a reason to be buying in this market yet. Personally, I don't see a reason to be buying these markets because I expect this market to do something like this all the way down here first before I can even look at this market, right? Before I can look at this market, and that's on the daily for that matter. So I could have like a couple of days where I don't even trade here. Moving on to the, I think I'm going to put that as one of the markets to watch, the Euro USD. The British Pound US dollar. Yep, the British Pound, the US dollar. Let's clean up this chart, take it up to the monthly and see what is happening on the monthly. So on the monthly, we have very similar scenario. Very similar scenario, right? We have ourselves a monthly fair value gap right here. And the first line of defense is actually not the fair value gap, which is not so credible. So we're expecting a bit of consolidation if possible. But turning it down to the weekly, let's see if we have a weekly situation. Yep, we do have a weekly situation right here. With the weekly situation right here. Now, take note, this weekly situation is just above the monthly, but it came out from the fact that there was a strong push in the last 3 weeks, right? And it's just above the monthly. So we might be falling into a zone where this weekly fair value gap may get disrespected. Not so certain. It may get disrespected. There's a higher tendency for it to get disrespected than getting respected. So I will be looking more out for daily bearish fair value gaps like the first one here. This is something you should pay more attention to than the weekly. So with the daily fair value gap being paid attention to, it means on the 1 hour you're waiting for price to come in and start to push its way downward. But again, if you find this weekly more interesting, you can take it and chase it all the way to the daily area. In my opinion, that is like also going to be a good idea, chasing the price all the way to this point. But like I said, the usual, right? Allow price show you the sharp turn first before you start to make this move. Also, you might want to second yourself saying things like directs or support and resistance, supply and demand. You cannot tell which is going to work, right? Just do what you know how to do best. The New Zealand US dollar. Well, okay, for the British pound, I think I'll also keep that in line. I like that. The New Zealand dollar against the US dollar. Let's start up from the monthly. Everything we're trading, everything we're looking at right now, we're going back to the monthly. We want to see if the monthly has a good reason to move forward. So we have this very, very, very untrustworthy fair value gap. But then again, that's the current contest. But the old contest is still here. Do not forget that one. The old contest is still here, having this fair value gap. So this is where we get the ping pong effect, which is where price goes up, comes down, and it could end up doing things like this. Probably then it can make its way up or down. But we are currently in an area where we'll get a ping pong effect. If you look at it again, this, even though there's a fair value gap here, a bullish fair value gap, which is supposed to be green, there is no overlapping defense at all whatsoever with it, which in this case suggests not so intelligent. Why do I say so? So I won't take any use of this, but I want to do something you would like, right? If I reduce this to this point, that's too much. That's too much. So if you just look at this fair value gap right here, right? Look at this fair value gap right here. You had an overlapping defense, and in the case of fair value areas, right? This is what you end up having. Up. Oh, sorry, that was terrible. That was terrible. Okay, so in the case of this area, what we'll have here is this. We have this down, and then this up, and then this down, which, as you can see, it has come into the fair value area. So we're expecting what? The push to push above here if price is supposed to remain bullish, which is market structure, higher lows and higher highs. But the market is not going to remain bullish. What we expect to see is price finds its way into this area and then push below this low. So right now we're looking at this low and this high for direction in terms of fair value area. We're looking between these two zones. Seeing price coming below here is price telling us, okay, I want to come down for something first, possibly aiming for this, or I want to push up more and this is actually higher than this. So I want to push up more and start aiming for other things above this direction, which is here. And all of this just simply says this market is shabby and confused. You can see the monthly confused, the weekly confused, the daily, the daily seems like it's even worse. Why? Okay, so we have this fair value gap, price still staying within it. First mitigation, second mitigation. Okay, so it seems like we have like a good news somewhere around here. The good news is we are expecting price to come. We are expecting, doesn't mean price will do that. We're expecting price to come up to this high. So if we're expecting price to come up to this high for the daily, then it means we're looking at the possibility of price going higher in this case. Hence, this market is quite bullish, but not bullish enough for a trustworthy view. So we could close that market, head into the US dollar, Canadian dollar. Okay, from the bat, right off the bat, I am seeing one of the most interesting moves here in the entirety of all the things we'll be looking at. Take a good look at this fair value gap with a good overlapping defense. Yep, this is the kind of market that I really want to put my ass into. Right, this is the kind of market I really want to put myself into. The month has ended. The month ended with a very strong, clear indication of a monthly fair value gap alongside a consolidation third candle, alongside a very good overlap. So I can see price is targeting here and then here. That's what I can say for this market. The US dollar losing against the Canadian dollar to a good extent in the coming times based on technical analysis with the strategy MMC, right? On the weekly, we had this slight fair value gap here, which may hold. Okay, I don't think this would hold because it doesn't have like similar characteristics with this. So we're looking at price. Basically, I'm looking at price doing this, and then in the long run, right? But this candle, this particular candle, is showing signs of need to go down time frame, see if it was returning. So it was returning before this happened, and then you look at it and say, okay, what I see personally is, see, it was actually falling. So what I see personally is the price might actually first and foremost push lower, and possibly start to push back into this zone before it comes down for this. So this is what I see like in a more detailed manner, but overall this is what I'm expecting the market to do. So whenever, I'm just going to be waiting for this market on the daily for it to come back within this zone and give me a sharp turn in the direction I am hoping for. So here is a market that I really see as trustworthy for me. Up next, the US dollar against the Swiss franc, and that was pretty close to having a very beautiful monthly view in my opinion. You can see that right here, but no good overlapping defense, just this as the first line of defense, which is not so good. The fair value gap is not the first line of defense. It's not as if it's a bad thing when the fair value gap is not the first line of defense. It's just that it is most preferable when the first line of defense is a fair value gap. It is way more preferable at that point. So let's see on the weekly if we still have something useful to deal with. Weekly, we had this fair value gap which has been mitigated, which is actually now being respected, actually being very respected. Let me just show you the weekly fair value gap being respected. So you can see it right here, and you go down to the 4 hours and you can clearly see I actually made profits from this market. You can see this is the market I traded for a 1.74 risk to reward ratio. You can see the strong fair value gap into the fair value inside the weekly fair value gaps. I'll put this, I'll hide this for now. So you can see it, strong wick in and then push out. So this was the market where I was testing my SuperTrend strategy, right? I saw those first in and fair value gap out, but I didn't take it for one simple reason. I told myself until price breaks below the trend line, which is the super trend line, I won't take it. So this particular market, you can see where I entered, it was after the trend line got broken. Normally this market is something that I ought to have entered around here. You can see the fair value gap out, so it should be here, stop loss here, and 2 risk to reward ratio would have been here. So this would have been the original trade without the trend line should I call it collocation or concurrence, or trying to add up layers to make my trading even better. So without that layer, I would have been in twice the profit I had made, obviously, but with very short move for a risk. But nevertheless, this market, what I just saw here is I can wait for daily context, right? I can wait for daily context. I could even still take this trade again. I can see the market is printing something I kind of like, which is the strategy I'm looking at. Sharp turns very close to the trend lines. In that case, I should have been trading something like this. Stop loss just with the trend line, aiming for 2. So 2 will be around here, but then again, I'm still refining this new strategy for myself. I want to see what it looks like. In that case, are we done? Yep. Okay, so it seems like we're done with the US dollar market overview for the next week and the coming months. And in all of that, I can only see 3 markets that I see credible enough to trade: the Euro US dollar, the British Pound US dollar, and the Canadian dollar US dollar. So these 3 markets are the markets I see as credible enough to trade, in my opinion, based on MMC strategy. Though I will still look into other minor pairs and see if there is a chance for a move in a good direction. But also today I was trying to get a look at my portfolio. And then I realized that XNES, the demo account for XNES, never shows more than 3 to 4 months behind. So for those of you who've watched my former videos, you could see the portfolio prior to this day. The account is just up 1.3% in total, because the account was a $10,000 balance account. I've made crazy amount of profits all the way to about 5%. You can see it's 10,500 here, and I've made some crazy losses in those days, which took me to back below the 10,000, and now I'm back to break even. I'm just back to break even, just a slightly above break even, 1% more. Still risking the same move, still risking 1% on every trade. Let's see how it goes. Though I have been mixing strategy a lot recently. I tried the dark strategy on the same account. I tried the MMC. I've been using the MMC strategy. I also tried the SuperTrend strategy on this account. So it is not straightforward because it is not a one strategy account. So what I'm just trying to do is I want to learn one strategy that works well for me, long run, profitable. That's the only target I want to work with. Right, that's the only target I'm going to work with. I'm only going to switch this thing when I finally get to understand fundamentals completely. But nevertheless, thank you all for watching. The name is Nicholas. Chuksniki is the channel, and I'll catch you all on another one. Peace.